Okay, hi guys. Welcome to our What's Up Lender Wednesdays. We are just hanging out today and getting yet more information. If you guys have not gone back through the little portal to show recorded trainings and all of that kind of stuff, go ahead on over to the chat area of this and take a look, and you can go back and pick up all the tutorials we've done since kind of COVID started and we started putting everything on Zoom. We have been recording as we go. This one is being recorded as well, so if you miss something or want to come back to something that Mr. Morgan has said, you will be able to access that through the exact same place within, today. Heather will get it up there and everything. So we would like to welcome Adrian, and he is going to go over what his company does, the way that all of these work. If this is the first one you're listening to, we're asking some of our lender partners to just go through kind of what they have, what they're offering and all of that kind of stuff, and just the real basics so that you know kind of how loans are working in our area and all of that. And then we would love for you also to kind of give us some ideas of how your company is different and everything at the end as well. So we've got a great little PowerPoint it looks like here. So I am going to, I'll keep monitoring the chat screen and everything so you don't have to keep looking at it if anybody jumps on and starts asking questions. But otherwise, just take us through how you do loans, what makes you great, and we really appreciate your time and you being here with us.
Thank you, and thank everyone for having me on today. I'm Adrian Morgan, as she was stating. I work for Morgan Solutions, and I just want to share with you all some of the reasons why I think our product or our services could be a service to you all. Okay. So two of the biggest things that I've noticed is most people don't understand the difference between automatic underwriting and manual underwriting. The automatic underwriting is where the computer, you put all the information in and the computer gives you an automatic approval. And then the manual is where a person actually has to go in and look at things to make sure that you meet the criteria to get the loan. The manual underwriting is the most difficult because they go back further than the automatic underwriter. Automatic underwriter normally goes back 1 year. It entails less paperwork from the buyer, and it's a little easier process. Still might take a little while, depending on how busy the company is, but it's a much easier process for the buyer. Manual underwriting is a little bit more difficult, and the reason why is because you have a live human there who actually has to go back. They normally go back 2 years. So depending on what's going on in the last 2 years, it can make a deal, it could kill a deal, right? Whereas automatic underwriting only going to do 1 year. So those are two major differences. The next big difference is you can have an approved eligible. However, if anything changes in that deal, it negates that approved eligible from the computer. Like I give you an example. You might have a person that come in and say, we can do 5% down. We're going to get a gift from a family member for 3.5% of that 5%. And then all of a sudden they'll change their mind and say, well, we can't get a gift at all. We're going to be bringing our own money. We don't have it. We're going to save it up. That will negate that automatic approval. And then you have to resubmit it to see if you can get the approval again. Or either that will make that loan into a manual underwriter. Also, people don't realize if you dispute anything over $1,000, it could be one trade line or it could be several trade lines. If you have a dispute with anything over $1,000, it will cause your loan to go to a manual underwrite. And a lot of people like to go to these credit repair people rather than going to a service where they do credit repair. And sometimes the credit repair people will just dispute everything. That can cause you a whole lot of headache during the process. So you might want to be careful. Also, you can get an approved eligible, which is the machine doing it if you have compensating factors. Compensating factors would be things such as length of time on the job. Have you been there a year, 10 years, 20 years? Those are all compensating factors. Cash that you might have saved up. A lot of people don't realize that their retirement account, 401k, pension, profit sharing, things like that can be used as a compensating factor. I've seen a person get an approval on the loan, even with having 30-day lates in the last 12 months, only because they had a retirement account, but had a retirement account with $50,000 in it. So that strengthened the file. Well, most people would have turned down that deal. That person was able to get a loan because of compensating factors such as that. One of the biggest things with my company is we require a letter of explanation from everyone. Meaning if you have a lot of derogatory things on your credit in the past, they just want you to explain what happened, what you did to fix it, and how you keep it from happening again. One of the things I like to tell people is I had a young man call me up, took an application on him, and you could see where his credit was excellent, and then all of a sudden it just went haywire. So I asked him what happened, and he gave me an example. He was like, I had a roommate who they thought he had died while I was at work. So they called me up and said, hey, we need to get into your apartment. Either you're going to have to come let us in, or we're going to break the door down because we think your roommate is deceased. He went home, let him in. Sure enough, his roommate had overdosed. But because his roommate had drugs, they charged him with a felony, which caused him to lose his job. He didn't have any money coming in. So all of his credit went haywire. That is a great excuse for why a person had something bad happen to him. He didn't have any control over his roommate being into drugs and stuff, overdosing, and he got charged with something that he had nothing to do with. Another example, I had a young man who was using credit cards. His reason for using the credit cards was me and my fiance at the time, we were living off credit cards. We took one credit card to pay the other credit card, but when we split, all the credit cards was in my name. So what I learned from that is never to use credit cards to pay credit cards, and probably not to get credit cards with someone when you're not married. So those are believable explanations. Sometimes people just put things that doesn't make any sense at all. I've even seen people who had a $25 late payment, $25 payment, and they were late on it. They went into collections. The person made $11,000 a month. And their excuse for not paying the credit card was, I just didn't feel like it. Well, if you're not going to pay $25, surely you're not going to pay something that's $100,000 or $200,000. So that would kill a deal. So those are important. So some of the programs we offer are FHA. We do government loans. That is our strongest point, government loans. As you can see, with 580 and above, we can go down to 3.5% down payment. With 500 to 579, depending on the strength of the credit, you can do 10%, and we can do that loan. You can even get the down payment as a gift from a family member. Okay. No credit score requirement. No credit score, you'll need to have alternative trade lines. Alternative trade lines can be a life insurance policy payment. I had a young lady, she had 2 alternative trade lines. One of them was an accidental death policy, where she was paying outside of work. They don't want you to say, well, I'm paying this through the job, but outside of work. And she also had a life insurance policy that she paid. Just paid it on time for the last 12 months. It could be car insurance. Most people don't know. It can even be a bank account where you can show that you are saving money over the last 12 months. That's huge. Okay. We can do some of the higher LTVs. It's going to have to be approved eligible though. But we can do them. I've seen them go all the way up to 56.9, 56.9, right at 57%. DTIs on a FHA. young lady I did. The last one I did with a 56.9, she had a 637 mid score. She had a 637 mid score. And she had a 56.9 DTI. And we was able to close that loan. Also, when you get to the 500 credit scores, if you're going to do anything over 50% DTI, you're going to need to get an approved eligible. That will probably come with somebody who has a lot of cash reserves. They're going to put down 10%, and then they're going to keep a lot of cash reserves. Those are probably some of our stronger suits. So we do manual underwriting. We try to go down to the last 2 years. We don't need to have any 30-day lease on installment loans or any 90-day lease on revolving. There are incidents where we can overcome those, but again, you need some compensating factors to get over those. I have a couple of people right now that are approved eligible, and they have 90-day lease, about 2 or 3 of them in the last 6 months. However, they also have some compensating factors. Got a young man with $60-something thousand in a retirement account. He had a foreclosure about 5 years ago. He's doing FHA, and I got an approved eligible on him because he has so much money he's going to have in reserves, and he's going to put the 3.5% down. Okay. Student loan payments on FHA, they're normally 1% of the loan amount, or the payment has to amortize, which really means that whatever the payment is, it goes towards paying off the payment. So a lot of people don't realize that an amortized payment can be 10, 20, 30, or 40 years. So you can have certain types of student loan payments that are not normal, something like an income-based or what a graduated payment. I would think that a graduated payment is more of a amortized payment, because that payment is going to help pay off the loan. That's what amortization means. As long as that payment is going to help pay off the loan. Most of the time, income-based payments aren't, because you barely making enough to pay the interest. Some of them not even paying principal or anything. So that does make a big difference. Okay. So we do double wides. We do not do single wides. There's 6% seller concessions, and condominiums need to be HUD approved. Also, with FHA, bonuses, overtime, and commission needs to be a 2-year history. Doesn't have to be the same job. So here's one of the things I want to just share with people that most people don't know. If they are working a part-time job, it has to be 2 years on that part-time job with no gap in employment, or they won't use it. Any gap in employment on a part-time job, they can't use that income, because it has to be 2 years consecutively on a part-time job. Okay. You can use co-signers on a FHA loan. Co-signers can be a child, parent, grandparent, spouse, brother, sister, aunt, or uncle for 15%. Of course, their credit score is going to have to be at the minimum 580. Don't need to be that. Also, you can use gift funds from those same people, with one catch. You can use gift funds from a friend if you can document that you've had a friendship for a while. If you've been in a relationship with someone, and what I mean by that is, I have friends that I've been friends with for 30 years. One of my friends ended up losing his job. He was going through a bad moment in his life. I let him borrow my car for 9 months. He borrowed my car for 9 months, and every other week when I saw him, I had to give him gas money. So, and this happened at an earlier stage in his life, but he's an accountant. So things happen to where, you can prove that you got a wonderful friendship with a person. This person has been there. I would qualify for someone that can give a gift for him, because I've done things throughout his life that really show our friendship. Okay, so if you have a really good friend and you can, document, hey, here's what this friend has done to me, or here's here's why they're such a good friend to me. You can use a gift fund from them as well. Okay. You can also have more than one FHA loan if you're moving a non-reasonable distance from what the first one is. You're increasing family home size, and you can get a cosigner. They could be a cosigner on FHA loan. Okay. All right. One of the biggest things with FHA loans is if it's a house that's being sold and the seller's only had it 3 months or less, we can't do FHA loans on that. We're pretty much strictly to the guidelines as a company. We go by the guidelines. We don't have a lot of overlays. The overlays that we have are so minimum that this might well be we're going strictly by the guidelines. Okay, but there are some things that we're not going to be able to get around. If the seller has owned that house 90 days, should be 91 days to 180 days, we're going to require a second appraisal. That's going to be on us. We're going to pay for that. That's not going to have to come out of your pocket, but that's just to protect the clients, to make sure that the house is really worth what these sellers are doing. They're not just trying to turn around and make a quick dollar on this house and hadn't really done anything to make this house worth what they're trying to sell it for. Okay. The appraisals do stay on the house for 6 months. So if a house is appraised at one price this month and the seller saying, no, that's not going to work for me, something happens, that's going to be on file for the next 6 months for everybody who's trying to get an FHA loan on that home. Okay. Some of the required inspections will be well water tests, private road maintenance agreement, foundation inspection for manufactured homes. Sometimes the appraisal can cause things to happen. I just had a loan here recently where the appraisal was saying the house was in a flood zone. However, our paperwork, because we do our own flood cert, and the insurance paperwork showed that the house wasn't in the flood zone. But because the appraiser said it was, we had to go get an elevation cert. Cost the client $800 up front, and then he also had to get home flood insurance on the home. He also had to get flood insurance on the home because of what the appraisal put on the appraisal. So you have to be careful of things like that. Okay. All right, our strongest area would be VA mortgages. And one of the reasons why is there's no minimum credit score requirement. No minimum credit score requirement. We have actually done loans as low as 475. As low as 475 credit score. And how we do that is we're looking for the last 12 months of making payments on time. That is VA guidelines, and that's what we're going by. If they can make payments 12 months on time, then you got a loan, right? So here's the beauty about that. If they come to me today and I say, well, you've only been making payments 4 months on time, they only need to make their payments 8 more months, and then you have a loan. Because remember, credit score is not the reason. It's not an issue for denial with my company. We do not go by credit score on VA loans. We're looking for 12 months reestablished credit, and then we can close the loan. Okay. There are manual underwritings. We have the manual underwritings. We're going to look at the last 12 months. They might go back a little farther. That depends. But for the most part, it's just strictly the last 12 months. It's 100% financing. There's no restrictions on how much money you can make, where you can live. We just don't do single wide. Manufactured homes, they're okay. I just mentioned we don't do single wides. One of the things is a lot of people think that if I can't afford the house on my own, can I bring my parents in? Only way you can bring your parents in, it has to be 2 veterans. They will have to be a veteran as well. It can be a veteran and a veteran spouse, or 2 veterans, but no non-vets can go on the loan. They won't let them go on title. They won't let them go on the deed. That is something you will have to do after closing if they're not a veteran. Okay, condominiums must be VA approved also. There's no minimum purchase price up to $484,350. Again, this is another program where they're saying income-based student loans, okay, it continued in the last 12 months. That's a little different. The problem with that is most of the time when a person has an income-based program, they have to recertify every single year. So if you come to us and you just recertified 3 months ago, yours won't continue for 12 months. It's going to end in 9 months. So you wouldn't be able to use that income-based loan. We would have to use the 1%. Now, one of the best parts about this company is we'll actually go up to 65% DTI. We actually go up to 65% DTI, which is huge because, you know, that helps out a lot when you have student loans or you have other debt, okay? We do need a certificate of eligibility. One of the things that I will say that people have to understand is just because a person says I'm a veteran does not mean they're going to qualify for a certificate of eligibility. And what I mean by that is you could be a veteran, but you could have got a dishonorable discharge because you did some things. And we've run into that where people saying, yes, I'm a veteran. And we'll ask them, can you get your certificate of eligibility? And they won't tell us until we get deep into the process. Well, I got a dishonorable discharge. Or it can be someone in the reserves. They don't get as much credit for being in the reserves for a year than a person who's been in there a year. So it takes them a little longer to get their certificate of eligibility. So you really need to get your DD 214 so we can order that thing and find out up front what's going on, or you can do it on your own. Get it up front, see how much eligibility that they're gonna get, because you can actually be in the reserves for 5 or 6 years and not even be able to get a certificate of eligibility. They say you can get this home because you don't have enough points. The neat thing about the points is if you're a veteran and you went to a war for 60 days, then you're going to get it. If you hadn't, then you need to be in there at least 6 months and a day. It's some kind of formula that they use, but you got to be careful of that. Those are some of the things that we see people not understanding. They think just because I was in the military, I'm a veteran. Technically they are, but they don't get some of the benefits that most people do because things happen. So you have to be careful of that. Okay. VA entitlement will allow you to reuse it as long as you sell that house, you can reuse, or if you make enough money and you have enough entitlement, you can get more than one home. One of the things I've noticed about the Jacksonville area, quite a few people that I come across, they are disabled. Once you get 10% or more, then your funding fee is waived. That's good. Okay, I mentioned earlier some of the beautiful things about VA. If you see unsecured loans for funds, meaning if you have enough money in your DTI, enough room into your DTI, let's say you was getting a home and your debt to income was 45%, right? We can go all the way up to 65%. If you needed to go get a loan to pay your closing costs, you could. They will allow you to do that, which is amazing for me. Gift funds are probably some of the easiest things in the world to get. You only need a person to say, I'm gonna give this person a gift. This is the bank it's coming from. It's gonna be a gift. Here's the address. Here's my phone number. And they'll give you a gift fund letter. The complete, they don't have to source or season anything. FHA, they're gonna have to source and season everything. Any and everything on FHA. FHA is very, very paper intensive. You're gonna have to prove everything. With VA, you don't have to go through a whole lot of headache when it comes to these gifts. So that is major. Some of the requirements are well water. Pest, we have to do a pest inspection on every VA. Of course, the buyer cannot pay for that. Private road maintenance agreements. If we have a private road, we just need to get the maintenance agreement. And again, this is another situation where if the appraiser says something that, hey, this might be an issue, you need to look into that, then we're gonna have to address those issues. USDA, we do USDA all the way down to 580 minimum credit score, but USDA is a more restrictive program. It's not going to allow you to have, this got to be your one home. You can't have another home. Of course, I said the 580 minimum credit score. The DTI is 2941, and that is where a lot of people disqualify for those loans. 2941, because they're trying to get a house that suits their family, they may be put their ratios at 41.5, and that'll automatically kick them out. And that's the back end. That's not even including just the house payment alone. They're not gonna go over 29. They're not gonna go there. And I mean, they're gonna fight you tooth and nail and say, no, we won't do it. Okay. Double wides are good. They'll do them, but here's the thing: they need to be new or never occupied. Which, in my book, that's pretty much the same. New. Student loans, the payoff needs to amortize. We talked about how amortization can be between 10, 20, 30, 40 years. But they'll take only a 0.5% of the loan amount instead of the whole 1%, which makes a big difference. Okay, condominiums must be HUD approved, and the maximum seller paid closing cost is 4%. However, if you have a situation where the house appraises for more money than what the purchase price is, and if the buyer needs the extra money, you can roll that extra cost in there from the appraised value to the purchase price. You can roll that into the loan to cover the closing costs for the seller. The buyer. You can roll it into the loan, which is a neat program, but they still have to debt ratio 29:41, and also it has income restrictions. It was 86,500. Another big problem with USDA is they're gonna require everyone in the house that is working. They need that income. It's not to qualify, but it's the income of the household, which could disqualify you. So that means if you're gonna bring mom or dad along to live with you and they're getting a Social Security check, that Social Security check is going to be used as part of the household income. If you got a 15-year-old kid that is fortunate enough and tough enough to go out here and work, that is also going to be part of the household income, and that could disqualify you for that loan. These loans take the longest. They are we underwrite them to their guidelines, to the USDA guidelines. Then we have to send a package to USDA, and they'll get to those loans. It's on a first come, first served basis, and they go by whatever date. So it can take anywhere from an extra month to an extra 2 months to get this loan closed if you're doing USDA. And that's something that's out of our hand. Doesn't matter where you go, that is just USDA. It's a government loan. It's a good program, but it's just time consuming, and it does have the restrictions. This is also something that will need a well water test, private road maintenance agreement if it's on a private road, and it could possibly need cause the client or the seller to hook up to the public sewer if it's available. Bankruptcies need to be 2 years from the date of discharge on a Chapter 7 and Chapter 13, and you got to make 12 monthly payments. So, but just keep this in mind. Most people don't use bankruptcy for what they are designed for. And what I mean by that is bankruptcy is to help you save your credit. Most people go into bankruptcy when their credit is already ruined. When they already have a credit score of 515, 520, then they sign up for bankruptcy. You need to sign up for that when you see this stuff when you see things going on to where you think, I'm not gonna be able to pay these bills, I'm getting ready to lose everything, I can't do it anymore. Most people do that at the end of that. You can see when things are getting ready to get haywire. Even if something just hits you all at once, you can prepare for it. That's what bankruptcy is for. A bankruptcy is not a bad thing if you use it the right way. I have seen people go into bankruptcy and come out with a 700 credit score. And I've also seen people go into bankruptcy and they come out worse than they went in. And that's because they went in when things were so bad. They just waited entirely too late, okay? Foreclosures, depending on the type of loan, your loan officer put you in. Conforming is 7 years out. FHA is 3 years out. USDA is 3 years out. And VA is 2 years out. So anything negatively impacting your loan, short sale, is still gonna be the same. If you got something on there and it looks like if it's safe foreclosure on there, you're gonna have to wait 2 years for a VA or 3 years for USDA, FHA, or 7 years for conforming. There's no way around that. If it's showing up as a foreclosure, even if you're saying, well, I sold it at the last minute, no, it's still a foreclosure. So with that being said, are there any questions?
Haven't seen anything come up on chat. I'm trying to think if I had any. I didn't write anything down. That was some really good information, and I really appreciate the kind of personal experiences and what can go wrong, and the just knowing and hearing you say, you know, that you have the time and the ability to walk people through individual circumstances. I think that's really important for our brokers and our members and everybody to know, is that they really need to make these relationships with great lending partners like you, who know that not everybody's just a number, and definitely that not everybody's just a credit score, and that there are things that they can do and bad things that have happened to their clients. You know, just knowing that people will look past a single or double little bad thing that's on there, or, you know, look for other ways around it. I think that's super important for everybody to hear, listen to, and digest, and just really know that you can continue helping clients. Even if one person has said no, that doesn't mean to not keep reaching out. And hopefully they will, you know that they can reach out to you too, and you might have some information to share with them, or you may be able to help them. So I really do appreciate that. While we're kind of signing off, would you be able to just type into your chat, or into the chat box, the best number and email address to reach you at? So if our people are watching this after the fact, they're watching the recording, and they cannot figure out how to Google correctly, that they would have that all in one place. And I think that's it. Heather, did you have any questions? I didn't hear anything that I needed more information on.
No, I think that this was phenomenal. And if you can send me your slideshow, if you don't mind sharing that, I can post it with the video so they can, click through as well. But no, this was a lot of really good information. So I really appreciate your time.
So I really appreciate you all taking the time to allow me to share with you how my company works. The young lady, she mentioned how one of the things that I do is I take a complete application on people before I ever pull credit. I don't just pull credit and then say, no, you can't do this. And I actually educate them on, here's where you are, here's what you need to do to get to where you need to be. Those are huge for me. Again, one of the things that she mentioned that stood out to me more than anything is I get a lot of calls from people just because I treated someone as if they're not a number. I treated them with respect, and I made them feel like, okay, life's not over for me. I'm not this bad person. I'm not this evil person. And a lot of the realtors that do business with me, they get a lot of referrals just because their people are treated with respect. And that's one of the things that I want to say. I really work hard to do. I try to return phone calls. I'm not perfect by any means, but you will get a phone call back. At the very least, you're gonna get a phone call back in 24 hours. I'm not a person that if you reach out to me, you won't hear from me for 5 or 6 days. That doesn't work for me. So I purposely don't try to take on more than I can handle, so I can give great service to the clients and the realtors.
That is, we really, really appreciate that. And that's just so wonderful to hear. Okay, well, we really do appreciate your time, and hopefully we can, push this out to a bunch of different people, because I really do think that you gave a little bit different information than what we've heard so far on things that you can do, and we will definitely make sure that people know that you are a fantastic resource. So again, thank you so much for taking time out of your schedule to do this. The presentation was great, and the slideshow was great. I think that all that's really helpful to our people with short short attention spans when they can click through things and just see what they want to see. And I really do appreciate it again. So thank you. And I hope you have just a wonderful day.
You do the same. Thank you. Bye-bye.
Thank you.
Bye.
Bye, guys.